Empires don't collapse overnight. They don't vanish in a single moment with a bang or a whisper. They decline gradually, predictably, and almost invisibly, until one day the world wakes up and realizes everything has changed. And in that moment, those who understood the signs and prepared for what's coming aren't panicking. They're prospering. That's the difference between those who react to history and those who build wealth from it. For decades, the United States has stood at the center of the global financial system. Its dollar is the world's reserve currency. Its markets set the pace for the global economy. Its debt, once considered the safest asset on Earth, has funded growth, innovation, and influence worldwide. But if there's one lesson that billionaire investor Ray Dalio has spent decades studying, it's that every empire, no matter how powerful, follows the same economic and financial pattern. And that pattern always ends the same way, with decline, transition, and a new order rising to take its place. This isn't fear-mongering. It's historical reality. And if you want to build wealth, protect your investments, and secure your financial future, you need to understand not just what is happening, but why it's happening, and how you can position yourself on the right side of history. Let's start with the cycle itself. Every empire, from ancient Rome to the Dutch, from the British Empire to modern America, follows a series of predictable stages. It begins with productivity. A nation builds, innovates, trades, and invests. That productivity creates wealth. That wealth builds power, military, political, financial. That power allows the empire to set the rules of global trade, often with its currency becoming the world standard. Then comes the Golden Age: prosperity, abundance, and influence. But prosperity often breeds complacency. Spending grows. Debt piles up. Productivity slows as societies shift from creating wealth to consuming it. Internal divisions rise, inequality deepens, and trust in institutions erodes. The empire tries to maintain its status through money printing, military spending, and political dominance, but these solutions only accelerate the decline. Eventually, the debt burden becomes too heavy, the currency weakens, and global power begins to shift elsewhere. Sound familiar? It should, because this is exactly where the United States is right now. The warning signs are flashing in neon. America's national debt has crossed $34 trillion, a figure that once seemed unthinkable and now grows by billions every single day. The government is spending far more than it earns, forcing the Federal Reserve to monetize that debt by printing money, a process that quietly erodes the value of the dollar over time. Inflation, once dismissed as transitory, remains stubborn. Interest payments on the debt are now one of the largest line items in the federal budget, and foreign nations, once eager to hold U.S. debt in dollars, are starting to look for alternatives. This is exactly how reserve currencies lose their dominance. It happened to the Dutch guilder. It happened to the British pound. And now, according to Dalio, the U.S. dollar is beginning the same journey. Does that mean it will collapse tomorrow? No. But history shows that once decline begins, it's nearly impossible to reverse, and the wise investor doesn't wait for the fall. They prepare before it happens. So what does that preparation look like? It starts with understanding that the world is shifting from a unipolar to a multipolar order. For nearly a century, the U.S. has been the sole economic superpower. But now, China is rising. India is rising. Emerging markets are rising. Trade alliances are shifting. Central banks are diversifying reserves away from the dollar. New financial systems, including digital currencies and alternative payment networks, are challenging the old structures. The game is changing. And in times like these, your wealth strategy must change too. The old rule book, buy U.S. stocks, hold dollars, and forget about it, is no longer enough. If you want to thrive in the decades ahead, you must think globally, diversify intelligently, and position your portfolio for a world where power and wealth are no longer concentrated in one country. Ray Dalio calls this risk parity. The idea that you should never let your financial future depend on the fate of a single market, a single asset, or a single currency. That means diversifying across asset classes, stocks, bonds, commodities, and alternatives. It means diversifying across geographies, developed markets, emerging markets, and frontier economies. It means diversifying across currencies, not just dollars, but also yuan, euro, yen, and even digital assets that operate outside the traditional system. It also means paying attention to what governments and central banks are doing, not just what they're saying. When a government is printing money faster than it's producing goods and services, inflation is inevitable. When interest payments on debt consume an ever-growing share of tax revenue, default or debasement becomes a real risk. When nations start trading in their own currencies instead of the dollar, the demand for that dollar falls, and with it, its purchasing power. These are not random events. They are signs of the cycle playing out in real time. But here's the good news. With change comes opportunity. While most people panic during transitions, the wealthy prepare for them. While most investors cling to the old ways, the smartest ones pivot early. Every major shift in history, the fall of the British Empire, the rise of the American century, the end of the gold standard, created once-in-a-lifetime wealth opportunities for those who were paying attention. The next shift will be no different. Consider commodities, assets like gold, silver, and energy. Historically, during periods of monetary debasement and geopolitical transition, hard assets outperform. Why? Because they are scarce, they are real, and they cannot be printed into existence. Consider emerging markets, nations that are on the ascent, building infrastructure, creating technology, and expanding their middle classes. Consider innovative sectors, artificial intelligence, clean energy, biotechnology, blockchain, industries that will define the next era of growth. And yes, consider alternatives like Bitcoin and decentralized finance, not as replacements for traditional assets, but as hedges against a financial system under pressure. Most importantly, consider your mindset, because the biggest risk in a changing world is not volatility, it's complacency. The investors who lose everything during empire transitions are not the unlucky ones. They're the unprepared ones. They're the ones who assumed yesterday's strategies would work tomorrow. They're the ones who ignored history because they thought, this time is different. It never is. The details change, but the principles remain the same. So where does this leave us? It leaves us with a choice. We can ignore the signs, keep doing what we've always done, and hope the system holds together. Or we can open our eyes, study the cycles, and prepare intelligently. We can panic about decline, or we can profit from transformation. Yes, the U.S. empire may be past its peak. Yes, the dollar's dominance may wane. Yes, the global order is shifting. But decline is not destruction. It's a redistribution of opportunity, and the wealth of the future will flow not to the fearful, but to the informed, to those who understand that change is not a threat, but an invitation. Think about the generations that lived through the fall of the British Empire. Many believed the world was ending, but those who adapted to the new order, those who embraced the rise of the United States, who invested in its companies, who believed in its potential, built dynasties. The same will happen now. The names and nations will change, but the principle will not. The future belongs to those who prepare for it today. Ray Dalio often says that pain plus reflection equals progress. The pain of empire decline is real. Economic uncertainty, market volatility, shifting power dynamics. But if we reflect on it, if we learn from it, if we act on it, that pain becomes the foundation of wealth. It becomes the signal that tells us where to move, how to invest, and where the next wave of opportunity will rise. So stop thinking about this era as the end. Start thinking about it as the beginning of a new global order, the beginning of a new financial landscape, the beginning of a once-in-a-century opportunity to build wealth on a foundation of understanding rather than fear. Because history is not destiny. It's a guidebook. And those who study it, those who respect it, those who act on it, they are the ones who turn uncertainty into advantage. The fall of one empire is always the rise of another. And if you align yourself with that rise, if you position your capital, your skills, and your mindset for the world that's coming, you won't just survive the transition. You'll thrive because of it. The U.S. empire may be entering its final chapter as the world's uncontested superpower. But your financial story is just beginning. And if you choose to learn, to adapt, and to act, this period of change will not be your downfall. It will be your greatest opportunity. The choice is yours. History is moving, and it will not wait. Will you move with it, or will you be left behind? Will you cling to the old world, or will you invest in the new one? Because one thing is certain, the cycle is turning, and those who are prepared for what comes next will write the next chapter of wealth, power, and prosperity.